What's going on, guys? Today I'm going to be covering the most commonly used trading strategy out there, and the strategy is called the silver bullet. So there's several things we're going to be looking for. We want a low, we want a high, we want a liquidity sweep, and we want a fair value gap, right? So the first thing we're going to look for is a push up, right? Now this is going to be a bearish setup on the 3 minute time frame. Now you can use the 1 minute, the 3 minute, or the 5 minute. Those are the three best recommended time frames to use for the setup. All right. So on the Nasdaq, this is the NQZ4. We have our rise up. We have our high. It falls down. Now the next thing we want to wait for is a liquidity sweep. So we want that push back up, and for you to know that this is a liquidity sweep, we have very high wick, which is a rejection candle. So once we get the rejection candle, we know that this is probably going to be a silver bullet setup. So once we get that rejection candle, we are anticipating a fall, right? The next thing we're looking for within this fall is our fair value gap. So you can see in between this red candle, and this red candle, we have a space open in between the bottom of this wick and the top of this wick. This here, already drawn off, is our fair value gap. So when it falls down here, we spot the FVG. Now our entry is going to be if and when the price does rise back, this candle, wicked inside of it. So this is where you're going to be placing your short position. Now, it's all on you on the size and the amount that you're willing to risk, as well as where you set your stop loss, right? I would set my stop loss somewhere up here just to be safe. I would possibly go in with 2 to 3 positions, if not a little bit more. So we enter our short position in the FVG at the price of 20,022. Now we just wait for the fall. It falls. Now, what I like to do is set my profit target at the low of the previous section, right? So we have our low here, then we have our push up for the high, and then the liquidity sweep. So your take profit is going to be at the low of this candle. Now, if you want to go lower, that's up to you, but my advice is just to get out at the low of the previous, right? Just to be 100% safe. Or if you're in with multiple positions, you can close one or two here and let the other ones ride. So once you enter into your short position within the FVG, fair value gap, you ride it down, right? It comes down. It doesn't quite hit that. It does come back up and try to retest the FVG, falls down and hits the profit target, right? But then you can see the price does try to retest the FVG, but it is rejected heavily. So from the price of 20,022 to the price of 19,979.59, which is the low of the previous section, that is a 42.41 move. If you are in just with one position with that type of move, every $10, every 10 points that the Nasdaq moves per position you're in, that is $200 for you. So this right here will be an $800 move, right? You will profit 800. Now let's just see what happens if you were to stay in past the low, right? The price keeps falling. Now, it won't always happen this way. Most of the times, this setup will only fall to the previous low. So that's why I have this marked off. This is where you want to take your profit, guys. All right, man. If y'all got any good information out of this video, y'all please like and subscribe. It helps the algorithms out, and I appreciate it very much. Y'all have a very great night, and I'll see y'all Monday morning for the New York Open. Later. Good night.